it is just a very risky market.
But where there's risk, there can also be reward.
We're talking about, triple and quadruple digit returns over time.
MarketBeat's Thomas Hughes shares a list of 5 small cap companies with tremendous potential.
The analysts are noticing. They're raising their price targets and they're helping lift the action.
His list covers a wide variety of sectors.
What it does is build data centers. They're reselling old clothes. Now, this is a smaller aerospace and defense contractor.
And gives you a chance to get in early on some potentially huge growth stories. Let's dive in. Thomas, so great to have you back on the show today with a list of 5 small cap stocks with a lot of great potential. I think this is a really interesting topic in the middle of market volatility. Every company, even the biggest Mag 7 stocks out there, have seen a lot of volatility. So it's not really different than these small cap companies we're about to talk about.
Right. Small caps are especially risky. They tend to have more volatility on a day-to-day basis than the broad market. Right now, I would expect to see most small caps outperforming the broad market in terms of volatility with the swings, just because they are a much riskier asset class. And that's just because their businesses are often unproven. They're very small, hence the name small cap, and they face lots of competitions. So even if a small cap company has a great product or a great business, there's probably going to be some other larger company out there able to outcompete them. So it is just a very risky market. However, the returns can be quite big. So if you find the right ones, we're talking about, triple and quadruple digit returns over time. The kind of stocks where, Microsoft, Amazon, Google used to trade at like 15, 20, $30, and now they're trading for 1,000 or 3,000, those kinds of returns over time.
Yeah, I think those are the returns that entice people to invest in these small cap companies. But like you said, a huge risk. So before we get into your list of the 5 companies you're really highlighting as strong potential right now, I want to talk about what's a good strategy for how much of your portfolio, your investments should be in these more risky small cap plays.
Well, that's really going to come down to individual risk tolerance and the plan that each individual investor makes with their advisor or on their own. But you're going to want to have a smaller allocation to small caps than you would to larger caps, just because they are riskier. And then within that, you're going to want to have smaller positions of these stocks because they are also riskier. But that way you can kind of spread the money around a little bit. You'll be invested in probably more small caps with a smaller allocation, but with a greater opportunity for return. It'll only take 1 or 2 of those stocks to really pay off, to recap or recoup all of the investment, and then to begin profiting. And then, once those stocks start taking off and they start to emerge as being less risky emergent small caps into this kind of a mid cap range, you can start adding to those positions and build on them over time.
If you do end up wanting to follow any of the stocks on this list, the best way to do that is by signing up for MarketBeat's free instant text alerts. You can just text YouTube to 68285 to sign up for our free SMS service that offers a weekly hot stock list and an opt-in alert for big moves on any of the stocks you want to watch right now. Well, let's dive right into your list of the 5 companies that you are looking at right now in the small cap category. What's the first company on your list?
Right. The first one is Root Incorporated. It's a smaller insurance carrier. The detail that kind of makes it stand out is it's direct to consumer business. So it's bypassing the whole agent network, and it's just using the internet and AI to drive business. So right now, revenue's growing pretty strongly. Revenue growth is expected to slow, but the earnings forecast is where it's really at. Right now, the forecast is for a 50% earnings increase this year and next year. That's pretty huge. That puts the valuation down into deep value territory regarding the forward outlook. And also, I think that outlook might also be cautious. The company is working hard to expand its reach into new states and also deepening penetration by offering more products. So I think over time, this company has a pretty robust growth outlook. Right now, also, the analyst trends are bullish for the stock. The number of analysts has been rising. Their sentiment is firming, and the price target is rising. So that provides a pretty strong tailwind for the market.
Let's talk about the overall industry that this company is in. Any factors that would really help spur some growth in this sector?
Well, I think the insurance sector is doing pretty well right now. There are several things driving it, not least of which is inflation. The more things cost to buy, the more they cost to replace. And so that's causing a lot of revenue and premium increases across the board. And in the end, it's also aiding margins for a lot of these companies.
So there is some potential for growth in this sector, but what about this company really sets it apart from the long list of competitors?
Well, what really sets it apart is its use of data, its data-driven approach to writing policies and to assigning premiums. It uses a very personalized approach, also based on usage, so it's able to provide its consumers a value while also sustaining its own margins.
All right, a good first pick. Let's move on to the second company on your list of small caps with potential right now.
Right. The second one is Applied Digital Corporation. This stock is kind of interesting because it used to be focused on Bitcoin and Bitcoin mining, but now it's really expanding into AI. What it does is build data centers. It's got one major campus right now, which is primarily for Bitcoin mining, but it's working on another major data center right now, which is being hailed as an HPC data center, a high performance computing data center, a next generation data center, one that's focused for AI and for doing these high performance computing needs. That campus is expected to start generating revenue by the end of the year. Revenue and earnings growth are both expected to start accelerating in the coming years as the data center network starts to be built out and the customers come in and use the product.
Yeah, this is such an interesting one for me because that data center is in my tiny hometown in North Dakota. And I've seen this construction site. This place is huge, but it does look really close to completion. So that timeline of being online by the end of the year is seems very realistic. So I think that's interesting. Let's
Right.
talk about data centers in general. There was some questions for a while about whether we need all this capacity, but I think the trend is still shifting to, of course, we are going to need this infrastructure to really support the growth of AI. Your thoughts on kind of that field and the demand there as well?
I think that what you're hinting at is on the money. I think that right now we're in this bubble phase where we're building out all these huge data centers, but I think that we will quickly approach this point where it's like, wow, we've got enough. We've got enough, or else there's enough in place that with the upgrade cycle with chips and with memory capacity, that we won't need to build new data centers, but just upgrade the old ones to the new technology.
Well, this company is certainly already well underway with its data centers. The price on this stock is still really low. What are analysts saying about the future growth for this stock?
Well, that's interesting because the nine analysts that MarketBeat tracks rate the stock unanimously as a buy. Now, the trend in 2025 is that they have trimmed their price targets, but the stock has overcorrected and it's now trading below the low end of their range. So, in that respect, it's a deep value.
Whether they're building new or upgrading those existing facilities, energy is going to play a big role in the success of all of these data centers. If you're looking to invest in any energy stocks alongside these, check out our free report on 7 energy stocks to buy and hold forever. These companies will do well right alongside these data centers. You can scan the QR code now or click the link that's right in the description of this video to download that free report on marketbeat.com right now. Let's move on to your third company you're looking at in small caps.
Right. The third one is Astronics Corporation. Now, this is a smaller aerospace and defense contractor. What they do primarily is make components for aerospace. They also do some testing. Right now, the business is growing with resilient demand in the commercial and defense sectors. It's outperforming analyst consensus estimates and it's raising guidance. Some of the critical details include record bookings and backlog. So the company's demand is at record levels, sustaining growth. We're looking at growth to possibly accelerate as the year progresses. And let's see here. Well, the analysts aren't that hot on this stock, but the institutions are.
It's interesting that institutions are buying. I think the question is why? Why are they buying this stock right now?
Yeah, I think it's just because of the aerospace industry in general. The aerospace industry is well supported by commercial and governmental trends. The U.S. is expected to ramp its spending significantly next year, and the company's making money. It all comes down to making money. And when the company is able to profit and return capital to shareholders and build value on the balance sheet, institutions get interested.
I think I want to talk a little bit more about the boom in aerospace. Like you said, there's a lot of investment happening in this area, which also means a lot of competitors. What sets this stock apart from some of the other ones that we hear about all the time too?
Well, it's part of the aerospace defense supply chain. So if you've got one company like Lockheed Martin building airplanes, it's getting some of its components from companies like this one, and so it is well positioned with these government contracts. They're locked in place for years. So yeah, that's got a pretty wide moat, I would say.
Well, let's move on to the fourth company on your list.
Yeah, the fourth company is called ThredUp. This one's interesting. It's a reseller for clothing and apparel. And what I would say is that this company is a poster child for what artificial intelligence can do for a business. Now, this is not an artificial intelligence company. They're reselling old clothes, but they've used AI to improve their operations. AI is improving user counts, not just sellers, but the buyers. Those are the ones that count. They're the ones that bring the money to the platform, also improving the operational metrics, and all of that has improved the outlook. So right now, the company, our Q1 results, it was in contraction, but they expect to revert to growth this year and to post a 10% advance by the end of the year. So we're looking at pretty strong results in Q2, Q3, and Q4. And the analysts are noticing they're raising their price targets and they're helping lift the action.
This is a company I have heard of before. If we have any female viewers out there, I'm sure they've heard of this company too. It's really popular among people who are kind of this thrift store trend of it's trendy to get things that are
Right.
reused and secondhand. It also seems to make sense as a company in a world where tariffs might be impacting some more of the imported clothing and other goods out there. So there's several factors that seem to be feeding the future growth of ThredUp.
Yeah, right. ThredUp certainly has some insulation from tariffs. It's going to be well. The company itself doesn't actually sell anything. It's just a platform. So all the users that are buying and selling are going to be buying and selling most likely domestic products, and certainly not products that are going to be going through any kind of an import export barrier.
Absolutely. And I can see any kind of consumer constriction on the economy. It also points to the move towards secondhand goods. That's why we saw some kind of resurgence in eBay and those sorts of sites as
Yeah.
well. So it's a similar concept to that.
Right. I don't know if inflation and higher prices will cause people to come to this store because buying an old T-shirt at a premium price does not sound like a bargain to me.
It's very true.
Right.
There's a lot of
Well,
designer sells on ThredUp for
so
sure.
I say that because my nephew, I don't know if he uses this website, but I know that he's been making a lot of money by going to the thrift stores, and he knows the old clothes to buy, and he's able to resell them at quite a profit.
Absolutely. They, like I said, it's very trendy. So I think it makes sense that this stock is trending higher right now because
Right.
it's a trend.
Sure
Well,
enough.
interesting fourth pick. I'm glad to hear a company name I recognize there. Let's move on to the fifth company you have on your list.
Right. The fifth company is Aeva Technologies. This company is focused on LiDAR, which is radar systems for autonomous vehicles. So this company is forecasting revenue growth up to 100% this year based on some new deals. And that forecast doesn't include the most recent announcement that they made, which was an expanded partnership with one of their previous partners, injecting a significant amount of capital to help them expand their manufacturing footprint. That sets them up for the mass market. And it should be a pretty strong mass market. We're still waiting for the autonomous vehicle industry to really take hold, but it should start gaining traction within the next year or so.
Yeah, autonomous driving has been such a big headline over the last year. It feels like in the volatility we've seen since April, that story kind of went away for a little bit. But obviously, the developments were still going on. That investment is still happening. This really could be a game changer. So, do you feel like investing in this company in particular on this list is kind of that early adoption phase?
I think that of all these companies, Ava has amongst the highest potentials for long-term success and shareholder returns. Certainly will be a well-entrenched industry once it gets established. I think, based on what I've reading and hearing and my own thoughts, is that once we have autonomous vehicles, it'll pretty much be the only kind of vehicles we have. There's really not going to be any reason for personal vehicle ownership if you can just use your phone to call up a ride anytime that you want.
It's definitely technology that could change an entire industry in the future, but it is still in development phase. And it seems like the big returns that investors might be looking for could still be a ways off. Any idea or anticipated timeline for those big returns for this stock?
I think it will happen before the end of this decade. As I said before, the company is already forecasting up to 100% revenue growth this year. The longer term forecast is for triple digit growth to be sustained for the next few years. It should be reaching profitability within the next 2 to 3 years. And I think that will be the real inflection point, not necessarily when profitability is actually reached, but when it becomes a certainty in the market's mind. And that might only be with another year or so.
Very interesting. Well, all of these are kind of unique companies to look at, not one field in particular, but a good widespread exposure to different industries in the small cap sector. So thank you so much for sharing this list, Thomas. Let us know what you think in the comments. Are you interested in any of these? Are they all a little too risky for you right now? I'd love to hear your thoughts on these or any other small cap companies you might be looking at too. Thanks for watching, everyone. And as always, happy investing.